Welcome to our program and update on payday and auto title lending. I'm Sharon Hirsch, Program Vice President for the Collin County League of Women Voters. The League of Women Voters Texas defines program as the education and advocacy platform adopted by members to empower voters and defend democracy. Along with all the important work we do in voter services, we have developed a series of educational events to address topics of interest to our community and our members and to connect those issues to their impact on our democracy. Please sign up for our league newsletter, or better yet, join our organization at LWV-Collin.org to receive updates on our plans. We are honored tonight to have three distinguished panelists here to answer our questions and share their thoughts and experiences on payday and auto title lending. Let's meet our guests. Elizabeth Colvin is an attorney and nonprofit executive committed to economic and social justice. She currently serves as the executive director of Raise Texas, a statewide coalition that is working to transform current systems, practices, and policies so that every Texan has the power to build sustainable wealth and prosperity. Before joining Raise Texas, she was the director of local affairs for Dell Medical School. Previously, she created and directed the health insurance enrollment program for foundation communities in Austin that has enrolled more than 45,000 individuals since the rollout of the Affordable Care Act's marketplace. Elizabeth also created and managed large free tax preparation programs in Austin and Houston. A passionate advocate for disenfranchised communities, Elizabeth is recognized nationally for her expertise in the intersection between access to healthcare, taxes, and financial stability services. Welcome, Elizabeth. Stephanie Mace has been a member of the League of Women Voters since 2008. And has served as the state payday and auto title lending issue chair since 2013, when LWV Texas adopted its position on this issue. She was instrumental in the city of Dallas's adoption of a payday and auto title lending ordinance in 2011 and a revision of that ordinance in 2022. Mace currently serves as the Associate State Director of Advocacy and Outreach at AARP Texas, where she focuses on advancing state public policies that meet the needs of older adults, including consumer protections and fair lending practices. Previously, Mace worked at United Way of Metropolitan Dallas and oversaw their advocacy and public policy work at the local, state, and federal levels for over 15 years. Born and raised in Houston, Mace earned a Master of Social Work from the University of Houston and a Master of Public Policy from the University of Texas at Dallas. She attained her bachelor's degree at Texas A&M University. She has served on numerous community boards, including service with the Texas Fair Lending Alliance, Texas Votes, and the City of Plano Community Relations Commission. And we're happy to have you here, Stephanie. Heather Mustaine has led Wilshire Baptist Church's missions and advocacy work since 2013, when she joined the staff as Minister of Missions. Her responsibilities include engaging congregants in missions experience in Dallas and internationally, while also equipping the church to be advocates on issues of justice. An associate pastor, Heather also oversees congregational life, pastoral care, and communications. She is a graduate of Baylor University, where she earned a Master of Social Work degree and a Master of Divinity degree from Truett Seminary. She earned a bachelor's degree in sociology from the University of Colorado at Boulder. Heather and her husband, Chad, have extensive missions experience, having worked in Ghana, South Africa, Jamaica, and Philadelphia. Heather has written on issues of social work in the local church and has been a presenter at the National Association of Christian Social Workers and at Baylor conferences. Heather is passionate about connecting people with service opportunities and feels called to help the church think about its mission to be both compassionate and justice-seeking. She is one of Wilshire's experts on the Enneagram and how it can be used for spiritual and personal development. Heather and Chad have two young children, a daughter, Jimmy, and a son, Bly. We're so happy to have all of you with us. Welcome, and I'm going to turn the program over now to our moderator, Stephanie Mace.
Good evening, everybody. Thank you for being here tonight. For me, this is an exciting topic. I love talking about payday and auto title lending reform and also policy. And I think it's so exciting to be back with the League of Women Voters of Collin County, because this was really where the league that cemented the idea for the League of Women Voters of Texas to adopt this position. And I believe in the bio, I think it said it was back in 2012, 2013 when it was adopted. So this has really been kind of a decades worth of work. And now we're able to really see how our coalition from around the state, in addition to the League of Women Voters, has really advocated for some of these changes. I am so excited that you're able to hear from the panelists that we have today. Elizabeth and Heather are truly experts and have done impactful work in this area. And so with that, I'm just going to really just jump in and give you an overview of the agenda, just so you have an idea of what we'll be discussing tonight. And then we're going to turn it over to Elizabeth. So first, we're going to cover briefly what is a payday or an auto title loan. The impact it had, this loan product has on Texas and its consumers, the faith community's response, and then looking ahead, what are some of the challenges that we see? Our goal tonight is to not get into the weeds. This is a very complex issue, and one where it's easy to get confused on the different types of loan products, but the goal is to really give you a high-level overview of where the market has gone over the past decade and where we think this ever-changing industry will probably go, and really how you can, at the end, we will really cover how you can help, because we really need consumer advocates to speak up. That's the only way that we've been able to make so much change in this space. So with that, I am going to share my screen and turn it over to Elizabeth. I hope I'm not missing anything else.
That all sounds good, Stephanie.
Okay.
All right, so let's talk about these really horrendous, exorbitantly priced financial products that are all over Texas. I'm going to sort of describe what they are, and then we'll talk about all the damage they do. So payday loans are designed, as a short-term loan that are given out at exorbitant rates that are really designed to set people up for failure. They're not designed to be, a short-term loan that's easy to pay back. It's designed to capture people in a cycle of debt. The average APR is 500%, and it's criminal, or it should be, but it's not. They are secured by access to a borrower's bank account and with a post-dated check or electronic authorization. I mean, it's a pretty sure bet that a lot of these are going to be paid back, because the terms are, they're taking money away from people, but they're charging outrageous fees. They have these varying terms, and most people can't pay it back because of the way the loan is structured. I think it's really significant to know that 50% of these sort of borrowers are in debt for a year or more. It's presented as a short-term solution, but really traps people in debt for a longer period of time. As you can see here, this is a very common occurrence. $1,000 loan, to pay it back is $2,400, and that includes the fees and interest. And then next, we have auto title loans. As we know, in Texas, like, your auto is your transportation to work. It's how you make money. It's how you get your kids to where they need to be. It's how you access medical care. Like, having a car is really a key to having financial stability. But when people go to these auto title places, they're charged 200% to 400% APR. They're secured with a car that's paid in full. These are cars that a person owns. The loan value is based on the value of the car. They've got these terms of 30 to 180 days. And again, these are designed to trap people in a cycle of debt. They're not designed to sort of help people out of a bind and then move on. The really frightening thing is that nearly 1 in 4 auto title borrowers lost a car to repossession in 2020. if you can imagine a worse time to lose your car at the beginning of COVID. So the way these loans are designed is really to require people to refinance. And that's how the payday lenders are making the money and all these fees. Because every time you refinance, you have to pay a fee to replace the existing loan with a new loan. And these loans are really designed to sort of force people to refinance, because over 40% of the loans made in 2019 were refinanced. That's not an exception. That's the rule, right? Like, that's how these were designed, if that many people are having to refinance. So you have an average $500 loan that will cost, $1,200 to $4,000 to repay with these refinancing fees. And it's the refinancing that really creates the very costly debt trap. And this next image just shows this cycle of debt. You've got a $500 2-week loan. You're just paying fees. You're never paying on the principal. So you're never getting ahead. You're never paying the principal down. And it's just, the fees continue to pile up. And there's another, just to emphasize this cycle, you've got a processor who, they apply for a short-term loan. They're just looking for something to help get them out of a bind. They're approved. They exhaust the cash, and they don't have the additional cash to pay the fees and the loan back. So they offer to refinance. And at some point when they can't refinance, they're turned to collections, or they just keep refinancing. It's a horrible cycle of debt that people get trapped in. And these have gotten more expensive over time. And which is, when you think about how things are so much more automated now, and how you can check things with the click of a button, like, the cost to administer these loans has not gone up, right? It's actually probably gotten less because things are so automated, and yet the price has gone up. So they're paying 66% more on average when you compare. They were they were bad loans, exorbitant back in 2012, and they've only gotten more exorbitant and worse now. And interestingly, I guess the good news is the number of new loans is going down, but the fees are going up. So these are just, it's hard to imagine that these could have gotten worse back from 2012, but they have. And this is just the most shocking, is what I mentioned earlier, is the number of repossessions reached its peak in the first quarter of 2020, when COVID was hitting, businesses were shutting down. And can you imagine losing your car at that point? And the fact that, these were when a lot of people were sort of realizing we were in this global pandemic and having some patience and grace for people, the auto title lenders did not at all. They pursued those repossessions. And then I pulled data specifically for the Dallas, Plano, Irving MSA, just to put some numbers to it, like how it's impacting people in your community. So between 2012 and 22, 81,000 people had their car repossessed. And you think of how that impacts an entire family. And like I said earlier, it's not just about a car, it's about accessing work, accessing healthcare, getting your kids to where they need to be. And they've lost their car and they have this debt. So, and then this next chart shows that the repossession rate has only increased. So these loans have gotten worse, and the chance your car is going to be repossessed is significantly higher. As you can see in 21 and 22, with almost 30% of people are losing their car to these loans. That is not a loan that is designed to help people, get out of a bind and be successful. It's a loan that's designed to trap people. So the consequences for our community and families are significant. In 2019, the fees for payday and auto title loans drained over $2 billion from Texans. And these are Texans who are already struggling financially. And repossessed cars from 42,000 Texans. these are lost assets, lost income, you can't get to work. And so these loans only push people further into poverty. So how in the world is this legal? Because we have, our Constitution prohibits lenders from charging more than 10% interest unless the Texas legislature specifically authorizes a higher rate. But payday and auto title lenders have found a legal loophole that they have exploited to the max. And it's essentially because you have a lender, but the lender has no contact with the borrower. And the payday and auto title lenders are set up as credit access businesses. So, and there's no cap on the fees. And it's really the fees that turn it into a 200% APR to 500% APR. And it's a loophole that has just been incredibly exploited. And things are worse in Texas. Things are bigger in Texas, and the fees are bigger in Texas. So next slide. So for the same products in Texas, Texans are paying much higher prices. And, this is not a matter of, well, they need to charge this to be able to survive as businesses, or it's like, really, it's the only way these businesses can function. Because we can see in other states that with interest rate caps and lower fees, businesses can still make loans for small dollar loans and stay in business. This is just exploitation in Texas, is what it is. Now, these loans are continuing to evolve over time, and that's this chart is about the structure of these loans. So, but I think it's important to keep in mind that as we've seen, these loans are just getting worse. They're getting more exploitive. They're not designed to help people succeed, and the industry is going to continue to evolve and perpetuate the harm they're doing in our community.
All right, now it's on to me. So what are some of the causes? What are some of the policy changes over the past decade that has really caused the market to change, for these products to change? So back in 2010 is when AARP and a lot of other kind of faith organizations tried to pull together the nonprofit community, the faith community, other kind of academia, the business community, to try and see what we could do to collectively advocate for policy changes at the state level. This was really when two main coalitions were established. So statewide, this was the Texas Fair Lending Alliance, which you'll see kind of as branded throughout this presentation. And that is really kind of the main statewide organization that was launched to really go after reform. A lot of the partners have been together since its inception back in 2010. And we feel like we've been fairly successful, even though we've had a lot thrown at us. And so you'll see all of the different policies that we have advocated for. And then locally, the Anti-Poverty Coalition of Greater Dallas was also launched. So this was kind of the main coalition in the city of Dallas, which helped to pass the first of its kind payday and auto title lending ordinance in the state of Texas. So kind of the Anti-Poverty Coalition of Greater Dallas started working with the Dallas City Council to try and see if they could advocate for policy changes. One of the elected officials that we were able to connect with in the city of Dallas was a council member, Jerry Allen, who was a former baker and really understood how these products really exploited individuals that were needing emergency funds. We took them down to Austin that session in 2011. I'm going the wrong way. And he was very active in trying to advocate and wear both of his hats, both the city hat and the banker's hat, to advocate for change. And this was really the first time throughout the state we brought together various community leaders to advocate and request changes. Unfortunately, as always, there was a really powerful lobby that session and every session. And so even with a lot of negotiations, we were only able to make we were able to make some policy changes, yet they weren't as meaningful and impactful as we had wanted. So the main policies that are in place that were passed in 2011 are just still the policies that are in place today. So one, payday and auto title lenders, which are also known as kind of the credit service organizations, by definition, they are required to get licensed by the Office of Consumer Credit Commissioner, so the OCCC. One, they must disclose fees, the repayment patterns, and any, they also, similar to the chart that was already shared, kind of showing them kind of how these fees are comparable and how many times in a year a typical borrower renews or rolls over this loan. They're also required to report consumer and transaction data, which is how we've been able to really get a better understanding of these products and the changes. However, it's only quarterly data. And so it's really hard to, and a lot of these loans kind of go between different quarters. So a lot of the information and data is really challenging to really understand and compare apples to apples. So we really weren't able to get at kind of what the causes of the cycle of debt. So that was where we went back after the 2011 session and asked the Dallas City Council to adopt a payday and auto title lending ordinance that really gets at the heart of the kind of their business practice. And that was the first, here are the kind of the key components that we get at. One, they're required to register with the city of Dallas. There is a limitation on the size of the loans arranged by the credit access business. It has to be no more than 20% of the borrower's gross monthly income for a payday loan, and the lesser of 3% of the borrower's gross annual income, or 70% of an auto title loan. We're just trying to really make sure that the borrower, as much as possible, is able to repay the loan, which is the goal of that provision. Two, it limits the number of renewals or kind of the installment payments, because one, as you saw, the biggest what adds up the most are the refinances or the renewals. So the city ordinance caps it at 4 installments or 3 renewals, and then the loan principal must be reduced by 20% with each of the payments that the borrower comes back to, and those either 4 installments or 3 renewals. And then we wanted to define what is a rollover or a renewal, because what we're seeing in a lot of cases is that a borrower will let's say pay off the loan, but then in 2 to 3 days, you know, they've put all of their money into paying off this loan, and so now they're needing more money to cover the expenses that they have. And so it really defines what is a renewal or a rollover, so that those payment or a new product or a new loan in 2 or 3 days would then be considered as a renewal or a rollover. Hopefully that makes sense. So the city of Dallas passed kind of this business ordinance, but then they also passed zoning ordinances, which a lot of other cities have done. So it really looks at how close these businesses are to each other. In a lot of cities, you'll see them right across the street from each other, right next to each other. And we're really starting to see a lot of that in Plano. And I think we all see them when we're driving around, but we really have no idea what's going on and just assume that it's just like a traditional financial institution, and it's really not. So I challenge you, we had a secret shopper program at one time to really encourage individuals to go out and to look at kind of the practices of this business. And so if you choose to, that's something to go in and just ask them go in and just ask them what a $500 loan would look like and see what you get. So since the city of Dallas, oh my goodness, since the city of Dallas adopted their ordinance back in 2011, 48 other cities have adopted almost the same ordinance. The whole goal was that by the city of Dallas, one, passing that ordinance, and then they were sued, then they would be able to really handle with the majority of the legal fees and issues that would be pushed by the industry, right, to try and overturn the ordinance. And so, and this also, you know, we're wanting consistency throughout the state. So now more than 11 million Texans are covered by this ordinance. You'll see a little later on that we have had to update the ordinance because over the past decade, there have been a lot of changes. And it's really mostly just updating the definitions. So, you know, after that, we were really active in spreading the adoption of the ordinance. There were so many other communities that were really interested in adopting it. And a lot of them are on the boundary of the city of Dallas. So Mesquite, Garland, Arlington, Grand Prairie. A lot of them are right next to it, because what they would see is as soon as the city of Dallas adopted that ordinance. So rather than opening a new location, instead they would just move their location right on the other side of the border of the city of Dallas. And so rather than trying to be preventing their city from being a haven, cities all around the DFW area have adopted this identical ordinance. Passing this ordinance really helped to spread awareness of the issue. And it really helped to jumpstart a lot of loan alternatives, and which you're going to hear about more from Heather. And it really helped to create a stronger coalition that we were then able to advocate at the state and federal levels. There have been a lot of, the industry has done a really great job of trying to push back and find different allies to help them poke through holes through the ordinance. And we've seen that multiple different times. The Attorney General released an opinion back in 2019, which really creates this new type of loan product, which really poked a hole in kind of our city ordinance. Which is why then the city of Dallas and Austin have also updated their ordinance back in 2020 and 2021, when the ordinances have been updated. Every time a city, or throughout this entire kind of decade, cities have constantly been sued for a wide range of different issues. For the city of Dallas, most recently, it was just based on kind of the process that they took to adopt it. They didn't feel like there was community buy-in. Other times, it's just the legality of if a city is able to adopt this type of ordinance, just based on kind of what the state regulates. Every time the cities have one overwhelmingly. So we know that the ordinance is valid, but we also know that the industry is coming back and fighting even harder every time. So with that, I'm going to turn it over to Heather to talk about what have been some of the recent legal challenges or recent challenges we've seen.
Thanks, Stephanie. So I want to say, first of all, I'm a pastor. And so while I have a master's in social work, I am not a policy wonk like Elizabeth and Stephanie. We kind of just stumbled into this work in regards to recognizing that we were seeing more and more people come to our church asking for financial assistance that were being harmed by these loans and unable to escape financial debt. And so at that time, the Anti-Poverty Coalition in Dallas was working. And so we kind of decided to get on board with not just thinking about how can we serve our community, but how can we begin to think about the issue at a deeper level and maybe even lend our voices, our witness, our stories to help create change. So we've been kind of involved in the Texas legislature when it comes to payday lending and trying to promote consumer protections. Since the ordinance and that time and period, it's really, we're basically have been playing defense and trying to make sure that that what we've been able to accomplish up until this point isn't taken away until really this past session. Out of this past session, House Bill 2127 and its corresponding bill in the Senate 814 was passed and went on to be signed in September into law. And the problem with this bill, many opponents call it the Death Star bill. So you may have heard that language, but it's basically a local preemption bill that basically means that cities and counties in Texas no longer have the authority to pass or maintain laws that exceed state or federal requirements. So it basically strips local governments of being able to govern themselves on local matters, which is kind of ironic if you think about it in the ways that, Texas really conservatives want to traditionally believe that government is better when the role is smaller, but here they're making it bigger. So this is not good news, not just in the payday lending space, but in a lot of spaces, particularly around housing protections, labor protections, any kind of ordinances that maybe require paid sick leave. So any type of local governing ordinances and regulations that cities want to pass, if it is not a law by the state or a federal requirement, then it basically has no authority. They did do a little bit of a carve out. The latest version that ended up being passed basically made an exemption for ordinances that were adopted before 2023. However, as you heard Stephanie talk about, typically predatory behavior doesn't just stop when it's challenged, it shifts and changes. And so basically, while those ordinances are exempt, it doesn't allow for the ordinances to be updated or to change to effectively kind of keep up with predatory loan products. So all that to say, that was a huge hit, I think, for, across the state. However, there are cities that are challenging the legality and the constitutionality of this bill, and particularly Houston, San Antonio, and El Paso have already filed suits. And so we'll just kind of have to see what its overall effect will be with cities. We don't really know the impact of that quite yet. So that was last legislative session. And then I was asked to kind of talk about federally what's happening. And really, I was like, I don't think much. In the past, advocates have called for kind of a national interest rate cap of 36%, but there hasn't been a lot of movement around that. We talked a little bit about the Consumer Financial Protection Bureau, which is really kind of it was created in 2010 under President Obama and was given kind of regulatory authority over consumer financial, products and protections. But they've been challenged by, recently they've been challenged by ACE, Cash Express, and basically the industry regarding the constitutionality of how they receive their funding. So the Supreme Court heard this case in October of 2023, but they to date have not filed an opinion, to my knowledge, about that. So basically kind of putting the CFPB, it has waxed and waned in its ability to do what it was created to do under different presidents. And now it's kind of tied up in a lot of litigation. And so, again, just kind of interesting to know and to see where that takes things. So, as a pastor, like I said, so much of the work that got us involved in this was seeing kind of the high cost that this was creating in our neighbors, and the vulnerability that it continued to have on our neighbors' day-to-day lives. And so, I think we had to begin to get creative, because some of the pushback that we received, even from congregants, was, well, where else are people going to go? What other alternatives are there when somebody needs a small dollar loan? Show me where the alternatives are. And so I think, in the last decade, I think people have really gotten creative and innovative in regards to helping create alternatives. You'll see that there's some data from the Catholic Charities. Over 30% of charitable assistance clients are in trouble with a payday or auto title loan. And so there's so many different ways congregations and faith communities and faith-based nonprofits can really help create alternatives, but also advocate for reform. you know, a lot of churches around the country have created credit unions that, like Friendship West Baptist Church here in Dallas has their own credit union, and they offer what they call Liberty loans, which are an alternative to payday loans. I know Oak Cliff Bible Fellowship also has a credit union. I know churches that have begun partnerships with credit unions where they will the church will actually back the loan. And through the credit union, folks can actually get a lower interest rate, small dollar loan, as well as being able to, you know, pay that forward and pay it back with some accountability and financial education. So that, you know, that is some of the ways that the faith community has begun stepping up and stepping into that space of recognizing that there's a problem and that there is something that, you know, we can do about it.
All right, so hopefully you can hear me now. So I think we've covered a lot of ground over the past 30 minutes or so. So I'd love for us to maybe now let's ask questions, I think, and then we can talk about, no, I guess Elizabeth, sorry, I'm going to switch this up. So then let's talk about what are some of the things that we can do. And Elizabeth, let's pass it over to you. I know Raise Texas has done a great job of creating kind of criteria for individuals to look at when they're thinking about a small dollar loan product. And I'm going to share my screen so we can kind of cover that.
Yeah, so Raise Texas has created sort of 3 documents, and it was really designed to counter what Heather talked about, this idea that people need access to this credit. So we did sort of a comprehensive review of what small dollar loans are available in Texas, like small dollar up to $2,500, with the interest rate not to exceed 36%. Like, what options are available for people? And we came up with this, and it's lists, and these, we also, everything on this list is available to people with lower credit scores or no credit. Those were our criteria. That's what we were looking for, because that's your target market for the payday and auto title loans. And this also shows that, you know, if we had regulation, we could have more of these products flourishing in Texas, but it's hard to compete with the noise and the prevalence of the payday loans and auto title lenders. So we have a list with statewide options. And then if you go to the next slide, it shows, I just pulled what's available in the North Texas area. And this is not every option that's available. These are the ones we were able to find and identify, and we're going to be updating this again this year. And we have shared this with legislatures and community leaders, sort of to help counter that argument that people really need these payday loans, and the payday loans are really the only product serving this need in the community, that there are other places that are trying to do that at affordable rates. And so we had this document, which was really designed for community leaders, policymakers, and then we created another document, and it's available in English and Spanish, and this is designed for consumers. Like, what do you need to look for when you need cash quickly? And so this is available on our website. You can download it. And we'll be updating this as well, just because, you know, there are new options available. We want to make sure everything's updated. But it's designed to, you know, not be judgmental in any way, try to reduce as many barriers as possible. Like, here are some things to consider. Here are some options that are going to be better for you in the long run. So that's what these documents were designed to do.
Great. Okay, so how can you help? I'm going to go back. We've covered a lot of ground, but I think it's important to kind of think, I'm so sorry that I'm so confused with this. There we go. How can you help? One, I think it's spreading awareness of what you've already heard, right? Some people have heard that payday and auto title loans are bad, but they're on every corner, so they can't be that bad. We need more people to know about the harm of payday and auto title loans, and make them aware of some of the documents that you just saw, that there are alternatives out there. And we can share with you the link to Raise Texas and the documents that we've just talked about. Another way that our statewide coalition is trying to think about this is, how do we reduce the demand of individuals? One, we've already talked about kind of those alternative loan products, but another great way is to talk to employers, especially those larger employers, so that they can offer as a benefit to their employees an employer loan product. There are some large products out there like True Connect and the Community Loan Center, where employers have no risk, but as a benefit, they're able to provide these products to their employees. They have a really low interest rate, and they're, depending upon the type of program, employees are able to take out a couple of thousands of dollars when they need it. And then they're able to pay it back in a reasonable amount of time. And then in a lot of cases, this will help them build their credit. So they are able to then maybe go to a traditional financial institution, maybe the next time when they need a loan. So there are loan products out there that I mentioned that we can send you information. Richardson ISD has signed up to offer the Community Loan Center product. Parkland Hospital in the city of Dallas, I think at one time, maybe not now. Those are some large employers that offer these types of loan products to their employees. And so it would be great if we could provide it to other school districts, hospitals. They have a lot of lower income individuals that most likely are being targeted by payday and auto title lenders. Two, encourage your city to adopt the ordinance. It is kind of in limbo right now, since HB 2127 is in limbo and in the court system. But it's a great, it's great to make a statement and to show our legislators that action is necessary. And so we would love to talk to cities that are interested in considering this loan, or maybe considering an employer-based loan product. There are also amicus briefs out there for city council members and cities to sign on against HB 2127, and we're happy to connect you to those organizations and individuals that are really pushing those to really try to show our support for the cities that have sued the state around HB 2127, which is the Death Star bill. Continue to receive action alerts. That's a great way during session to get action alerts about what's going on in this issue. But you can also follow our coalition, the Texas Fair Lending Alliance, on Facebook and Twitter, I believe, and we're sending out information, a lot of information from the Consumer Financial Protection Bureau on different loans. There have been different new companies in our community that are being fined or penalized for some of their practices. In a lot of cases, individuals aren't as aware of what's going on, and they could have been victimized by it. So we're trying to post more on our social media, but then also talk to your faith leaders. If you are connected to a faith community, encourage them to get connected. That has been one of the one of the biggest reasons why I think our coalition has been so successful is so many different diverse faiths that have come together to support our efforts. We have the Baptist, we have the Catholics, we have the non-denominational, we have Muslims. We have such a wide range of different faith organizations at the table, and that legislators, I think, take notice when some of these faith organizations come together and are really advocating and use their pulpit to talk about these issues. So those are some of the ways you can get, we would appreciate your help, but happy to answer questions. And if you have other ideas, happy to talk to you after. So with that, I'm going to stop sharing my screen. Okay, and there you go. Now you can't see my screen. So, on to questions. Let's see what's in the chat box. So, why are legislators reluctant to regulate payday and auto title lenders? Does the industry have a strong lobby? I don't know who wants to take that on, Elizabeth or Heather.
Well, I answered in the chat, yes. The industry has a very strong and powerful lobby, and a lot of our elected officials receive funding directly from the industry. And so, yeah, some of it comes down to that. Yeah.
I was going to say, there's been a couple of reports on the amount of donations that they have given, the industry has given legislators. If you're interested, and I can send that to you at a separate time, because it is really astonishing. I think one session, especially I think back in 2011 or so, I think there were over 100 different lobbyists that were working for the industry, and they are high powered. The CEO of one of the national companies is located in the DFW area, and he hosts fundraising events for different legislators at his home too. So there's a lot of yeah, they work closely together. And
Yeah, it's my wish that they had to be like NASCAR drivers, where they had to put their supporters all over their jacket, so we could just
Yes.
see when we're testifying, sponsored by Ace Cash Express.
That's right.
you can definitely tell when they have close relations with the industry, because they will share kind of their talking points.
Yes.
And it's not one party, it is definitely both parties. It is equal opportunity offenders. Has the use of these products increased along with higher cost of housing, rent, groceries, and gas? I don't know, Elizabeth, if you want to kind of take that.
Yeah, well, I just addressed it. It did go down when people had access to more support, like especially through those monthly child tax payments that were tremendous, that people got payments on a monthly basis from July through December. There was increased amount available if you were unemployed through the expanded child tax, earned income tax credit. Like, people were able to access cash to meet their basic needs. And when they had that, they didn't need these predatory loans. They didn't so the use went down. But most of those programs have ended. And especially as you brought up with inflation, the higher cost of gas and housing and food, if people aren't aware that they have options, they are going to turn to these products.
Elizabeth, I have a question. What are how else are we seeing kind of the market or these products or the industry kind of evolve? I feel like I've seen in advertisements for kind of earned wage products, earn in, are there kind of similarities between these types of products?
The earned wage access products, and they're advertised on the radio all the time. It's like, life doesn't happen every bi-weekly. And basically you pay to get your money you've earned sooner through these earned wage access products. They're completely unregulated at this point. And I think the concern is that if they are not regulated and not given, that they will turn into just another bad version of what we're dealing with now with payday and auto title loans. So I think, yeah, these online products are very concerning. And as more people turn to online products, those are concerning. We do expect the earned wage access to be a big issue in the next session. I think, and because they are advertising so much, they're clearly trying to come across as like, we're really helping people out, because it's the employers who are holding back the money, and we're helping people get their money sooner. But the way they're structured and the way they ask for tips is concerning. And Stephanie, I know you've been following this too. You may have more to add.
I will say that, yes, earned wage access, we saw a bill last legislative session, and we were able to get it. I think it just time ran out, thankfully. Some of the legislators that have traditionally been kind of our allies around payday and auto title lending reform, were supportive of this because they thought it was a better alternative to payday and auto title loans, and we completely disagree on that. And then I'm also seeing in the news that other states are seeing these kind of earned wage access products trying to get codified in other states. So it is not just a Texas thing. It is definitely something kind of a new product that we're seeing around the country. Heather, as I don't know if we've talked as much about kind of about an individual that uses these products, but I believe you've said in your church that you've seen some parishioners that have used this. Are you able to maybe share a story of anybody that has used this product? And do you feel like do they openly share that they have used these products, or kind of talk to me about kind of what you've seen in those situations?
Yeah, I mean, I think typically people are not forthright. It's not typically how they start the conversation, right? And so, when someone either comes to the church looking for financial assistance, or a member that is in need, typically they'll ask for something, but as you begin to kind of dissect it a bit, it's like an onion. That's kind of how I describe it. You peel back the layers of kind of what their presenting problem really is. You tend to find out a bit more. And so, yeah, I mean, the folks that, we've helped in regards to paying off some of the, we typically just pay the loan off for the person. We don't do a lot of like, we'll pay this off for you and you can pay us back. It's typically when we give it as a gift. And so, the ones that we have paid off for folks have started as like, I just kind of got in a bind, right? And I had to make a choice, and I needed my car, and my tires were out, and I didn't have access to cash. And so I got myself one of these payday loans, and then it just kind of, I couldn't keep up with it. And so that's typically the story that I've heard, is that because we're all just a paycheck away, right, from disaster. And some people end up there, and so they turn to a payday loan thinking that, okay, I know I'm going to get my check next week and I'll be able to pay it off, but then something else happens. Or so typically it is the stories of like, I didn't have a rainy day fund and I needed to get tires so that I could get to work. So that's been a lot of the stories that we've heard is, I just didn't have it and I needed it.
I will add, when I started working on this issue back in 2011 or 12, I was in some way I got connected to the St. Elizabeth Ann Seton Church in Plano and started talking to the lady that ran their benevolence fund. They were very aware of this. A lot of the individuals that had reached out to see if they could get assistance, a lot of the individuals had payday or auto title loans, and she said that one of them had 10 payday loans at one time. That is the most I have ever heard. But they would just kept kind of getting caught up in the loan. And so then they would take out another loan and it just kind of rolled over. And so that's the most egregious case I've heard of. But like Heather has said, I've received some just really sad calls of a lot of seniors too, that their car was kind of their connection to their community. And they, took out a loan for their AC, for their car, a lot of grandkids helping their children. So I don't know if any of the speakers have anything else that they want to add. I think we've had a pretty robust conversation, and I don't see any other questions in the chat.
Yeah, thank you all so much for being here. I really appreciate it. I think you've reinforced the fact that it's very expensive to be poor. And I like the idea of maybe doing a project of looking up the political donations of our local candidates to see if they have any ties there and how we can make people aware of the connection there. So anyway, I guess if there aren't any more questions, we're going to conclude the program. I really want to thank all of you panelists for taking time out of your very busy schedule. I know how busy all of you are. You're all doing great work, and we really appreciate everything you're doing. It's been a pleasure to have you all with us. And to our audience, we hope you gained some valuable insight or discovered some way that you can share your support for the important work taken on by our panelists and their organizations. So we do want to let you know that this has been recorded. We will put it on our website for viewing. We'll get links out to everybody. And if possible, Stephanie, maybe we can get the slideshow and slide presentation that we can share to our members as well. So we also want to remind you that we have an important primary election coming up. The deadline to register to vote is Monday, February 5th. Early voting begins on Tuesday, February 20th, and it goes through Friday, March 1st, with Election Day on Tuesday, March 5th. We will have our recorded candidate forums on the website prior to the start of early voting, as well as our voter guides. Another great resource for information and a personalized ballot is vote411.org. Again, thanks to everybody for your interest in today's discussion and for being an informed voter.
Thank you.